Technical and macro analysis, gold. Technical structure and symmetrical triangle retest. Gold is stabilizing at $4,021 on the 4-hour, 4H, chart, carving out an essential consolidation boundary within a multi-week macro correction. After suffering an extended downtrend from its structural swing high of $4,597, the price action has compressed into a prominent symmetrical triangle formation. Green and red alternating candles are currently testing the upper boundary of this triangle, which acts as descending resistance around $4,091. Crucially, the downside remains firmly insulated by a rigid support zone at $3,959. This level has been validated by a highly reliable triple bottom formation. Recent sessions showcase a strong bullish rejection at this floor, characterized by longer lower wicks and a progressive series of higher lows. Momentum, moving averages, and volume profile. Despite the localized bullish accumulation, broader momentum remains tightly bound. The Relative Strength Index, RSI, sits at 39, placing it in a neutral, slightly bearish-leaning posture that reflects the lingering effects of the primary downtrend. Capping immediate upside expansion is the 50-period exponential moving average, EMA, in blue, positioned strictly at $4,087. This moving average forms a strict structural confluence with the $4,091 triangle resistance. An examination of the volume profile highlights dense structural buying activity clustered between $4,000 and $4,091. This high-volume node confirms that the market views this zone as an institutional value area. The confluence of key Fibonacci retracement levels inside this cluster further solidifies the near-term support framework, offering a launching pad for an anticipated bullish breakout. Macro driver, technical and macro analysis, silver spot, $58. Technical structure and Fibonacci defense. Silver is hovering at a critical inflection point around the $58 psychological level on the 4-hour, 4H, chart. Following a sharp correction from its swing high of $69.85, the price action has transitioned into a tight consolidation phase. This range is currently testing the Fibonacci 0.236 retracement level near $58.62. The printing of alternating bars in this zone highlights a fierce battle between accumulation and distribution. However, the prevailing market structure favors the bears. A series of bearish red bars characterized by lower highs indicates that rallies are actively being sold. Overhanging this consolidation is the red moving average, MA, at approximately $62.81, which serves as a formidable line of resistance to any near-term upside. Momentum and volume profile dynamics. With the Relative Strength Index, RSI, registering a bearish-leaning 37, momentum remains neutral to the downside, signaling that the path of least resistance points lower. A deeper dive into the volume profile reveals that the $57 to $59 range represents a high-volume node. While this zone historically acted as resistance during the broader downtrend from the $69.85 peak, it is currently attempting to hold as temporary support. The presence of prominent rejection wicks in this cluster paints a dual picture: immediate selling pressure on minor intraday bounces, paired with patient, defensive accumulation at the $58 floor. A failure to hold the higher lows established in this tight range will likely trigger a rapid liquidity hunt lower. Macro backdrop, supply constraints versus energy demand. Fundamentally, silver's downside remains cushioned by structural supply deficits. Because the majority of global silver is mined as a byproduct of lead, zinc, copper, and gold, primary silver supply cannot easily scale to match demand. Mine output continues to face persistent operational and geopolitical headwinds, which are only partially offset by rising recycling volumes. On the demand side, silver's dual identity as a precious metal and a critical industrial commodity supports its long-term floor. It is a cornerstone of the global energy transition, experiencing aggressive demand growth from tactical trade setup. Despite the strong long-term structural demand, the short-term 4-hour technical frame suggests further downside expansion before a structural bottom is found. Entry zone, short position initiated around $58 on a confirmed 4H breakdown. Stop loss, placed strictly above $59.36, invalidating the bearish structure if price reclaims the high-volume cluster. Take profit target, $55.60, aligning with the next key liquidity shelf below the current consolidation range.